What if I told you that some of the wealthiest people in America pay absolutely $0 in capital gains taxes on investments worth hundreds of millions? And what if I told you this method is completely legal and available to you right now? Welcome to Wealth Vault, where we expose the financial strategies the ultra-wealthy use to build and protect their fortunes. Today, I'm going to show you exactly how this tax loophole works, why the IRS actually encourages it, and how you can start using it immediately to slash your own tax bill. This isn't some theoretical concept or overseas tax haven scheme. This is happening right here in the United States and Canada every single day. While middle-class investors hand over 20 to 30% of their gains to the government, the wealthy are using a strategy that's been hiding in plain sight for decades. The crazy part? Most financial advisors either don't know about this or they're not telling their clients because it doesn't make them any money. Here's what you're going to discover in the next few minutes. First, I'll reveal the exact mechanism that allows investors to completely eliminate capital gains taxes legally. Second, I'll show you 3 real-world case studies of how billionaires have used this strategy to save hundreds of millions in taxes. And third, I'll give you the step-by-step process to implement this yourself, regardless of whether you're starting with $1,000 or $1 million. Let's start with a question that might shock you. Did you know that Elon Musk, despite being worth over $200 billion, has paid zero capital gains taxes on the vast majority of his Tesla stock appreciation? Same with Jeff Bezos and his Amazon shares. Warren Buffett, who's been preaching about higher taxes for the wealthy, has legally avoided paying capital gains on most of his Berkshire Hathaway holdings for over 50 years. The secret isn't some complex offshore structure or illegal tax evasion scheme. It's actually built right into the US and Canadian tax codes. And it's called the buy, borrow, die strategy. But most people have never heard of it because it requires a minimum level of wealth to execute properly. Until now. Here's how it works in simple terms. Instead of selling your appreciated assets and paying capital gains taxes, you borrow against them. Banks and financial institutions will lend you money using your stocks, real estate, or other investments as collateral. You get access to cash without triggering a taxable event. Then, when you die, your heirs receive what's called a stepped-up basis, which essentially erases all the capital gains that accumulated during your lifetime. Let me break this down with real numbers. Say you bought Amazon stock 20 years ago for $10,000. Today it's worth $1 million. If you sell it, you'll pay capital gains tax on $990,000 of profit in the highest tax brackets. That could